Jamaica is a highly prospective target area for different kinds of deposits in an island arc terrain.
As probably the most widespread, intensive, and in-depth exploration program that's ever been carried out in this island.
5 or 6 years worth of work into just 2.
No one else has ever done this before. There has been historic work on the island, trending back 150 years.
I think they're getting excited, as we are, so stay tuned.
Well, thank you very much for having me here today. I've been really looking forward to this session about how supply chains have changed in the mining industry in the last 12 months. My name's Lucy Crane. I'm a senior geologist at Cornish Lithium, where we're exploring for lithium contained within geothermal waters in the southwest of the UK, as well as for lithium and other battery metals in hard rock. I also work on business development and communications with our CEO, Jeremy Rathall. Outside of Cornish Lithium, I sit on the committee for the Young Mining Professionals, and over the last 5-6 years, I've actually been really heavily involved with Women in Mining UK as well. And I think we all really need to be proactive about making the industry a more diverse and welcoming place to work. But anyway, today we are going to be talking about how supply chains have changed over the last 12 months and what this means for miners and investors. As we all know well, the world has changed dramatically in the last year in ways that probably this time last year none of us would have predicted. The global pandemic has really thrust these global supply chains into the spotlight and highlighted quite how dependent we all are on China for many of our critical raw materials, or at least the processing of them. And alongside many shifts in the kind of geopolitical landscape globally, we're also seeing a move in Europe and the UK to actually investigate if we can produce some of these raw materials domestically, if it's geologically possible. Coupled with Brexit and the rules of origin, is having a real impact already on the automotive supply chain and the move to build battery ecosystems in the UK and Europe. And there's also this increasing drive that we need to act now if we want to combat climate change. And that is going to be hugely mineral intensive. The World Bank estimate that we're going to need 500% more battery metals by 2050 than we produced last year. So as an industry, we've got a lot to do in the next few years if we're going to be able to meet this demand. Fortunately, we've got a fantastic panel lined up for you today to discuss this. We all know that webinar fatigue is real, so we're going to keep it short and snappy and interesting. So anyway, that is enough from me now, and I'm going to hand over to the panel to introduce themselves. So Matt, please can we start with you?
Sure. My name is Matt Fernley. I've spent 20 years as an equity analyst specializing in the mining and basic materials space, and I'm currently editor of Battery Materials Review and head of research for Westbeck Capital's Volta Battery Materials Fund.
Excellent. Thank you very much for coming along today. Jackie, can I hand over to you next, please? Oh, and you're on mute, the eternal phrase of the last 12 months.
Oh, that's the first time today. So hi, I'm Jackie Murray. I'm Deputy Challenge Director of something called the Faraday Battery Challenge. That's a £318 million programme investing in battery innovation for electric vehicles in the UK. It's a very exciting space. So I guess today, Lucy, I'll be talking very much from the sort of battery trends point of view as opposed to the mining end of the supply chain. I'm also a visiting professor at the School of Engineering at Leicester University, looking at, like you, interested in diversity, but also looking at performance and the skill sets for inclusion. So nice to be here.
Wonderful, and thank you for being here. And yeah, as you said, the perspective that you're going to be able to lend to this discussion is going to be really useful. Jonathan, please can I hand over to you to introduce yourself next?
My name is Jonathan Cordero. I'm the head of corporate development for Eurasian Resources Group. We're a diversified natural resources producer operating with 85,000 people in 15 countries across the globe.
Wonderful. Thank you very much for joining us today. And then last but certainly not least, Peter.
Thanks very much, Lucy. Where do I start? I dug my first hole when I was 3 years old, so I've been in mining ever since. I graduated Montana School of Mines in 1981, came to South Africa. I'd already worked in the industry since 1972, but I worked about another 3 years here. Did an MBA, marketing manager for IMCO Mining Machinery. Then I worked in investments as an analyst for a few years, then analyst and fund manager for 12 years. I've been in corporate finance though since 2006, and it's definitely the hardest, most difficult part of mining I've ever been in. I hope I don't die in corporate finance. We've got a couple mining projects that I aim to play a very big role in after this year. So maybe I can end up where I started, back underground in a hole. But battery metals, look, I've probably mined a couple of these battery metals, and South Africa definitely has quite a few of them, but I must say my experience on them is very low. I'll battle to contribute anything that you people don't already know in this business.
Well, thank you. And we're not just going to focus on battery supply chains over the next 40 minutes or so. So let's start with the big question. From your perspective, what's had the biggest impact on supply chains over the last 12 months, and how has it affected your business? I'm going to ask that to Jonathan first.
Well, over the past 12 months, I believe we learned two things. On the one hand is how fragile traditional business models are. Traditional business models are usually shaped by maximum capital gearing, focus on core competencies, outsourcing of the rest, just-in-time delivery, all the things that make it very, very fragile to global supply chain disruptions. At the same time, what we've seen over the past 12 months is a greater realization of the interdependency among the various players that we have across the global supply chains. And that in the context of more nationalistic feelings in the various countries made it extremely difficult for all the players to operate in this context. And if you trust the World Economic Forum, for instance, this is rather going to get worse, not better, in the next 12 months. They're expecting, a greater tendency towards interdependencies, into more nationalism, into trade wars, and all in combination with a, say, more dampened consumer spending on that end. I think we learned a lot over the past 12 months, and the big question is, how do we move forward?
Excellent. Peter, what are your thoughts on this?
There's definitely been a 12 months in favor of the big established players, because they control so many parts of the supply chain. And by virtue of them, the longer they've been in business, the better they can do it. So companies like Billiton and Anglos that are good at sourcing, are good at refining, right down to the marketable product, they've done really well. The lockdown we had in this country probably hit them really hard for 5-6 weeks, like everybody. And then the lockdown just lifted, and they couldn't get back going fast enough. And that's despite the virus. So who's really been hit hard and cannot get off the canvas is the startups, is the small caps, and definitely early stage. So the venture capital, the private equity, because they were so fragile, they were so dependent on too many other sources. They were just starting to put into place their supply chains. And those were usually put in with small people almost as desperate and willing to go the extra mile for half the price. And so they've all fallen down. So it's polarized mining more than it ever has, I think, probably in the history of the world. But in South Africa, it's even worse because the legislation brought about here the last 20 years, the MPRDA, the BE. I know it wasn't intentional, but all that legislation had already given a big edge to large established companies that could have all these department heads, that could have all these people handle all the requests, do the scorecards, how many people are you employing from disadvantaged backgrounds? How much of your supplies are being purchased from them? How much of your sales? So it's really been, I think, a double whammy for all South African small, mid-size, and startups. But the big companies, you could see, the commodity prices have just made it even better. If you were established in producing and you controlled all aspects of your discovery, production, refining, and sales, just look at the numbers and they tell you all the established companies have never had a better year.
Yeah, so it's just widening that disparity then, isn't it?
It is. It's real barbell effect, yeah.
Yeah. Jackie, I imagine you've probably got a slightly different perspective. What are your thoughts on what's had the biggest impact on these supply chains over the last 12 months globally, and how's it affected the world you're in?
I guess the world I'm in, let's sort of set that scene. So we're working with battery companies innovating in automotive, in aerospace, in mining equipment, Peter, not mining, in everything from rail and marine and off highway. So we are working with those sort of transport sectors in particular. And what we're seeing is perhaps it's the same thing, really. It's about risk. So I'm going to agree with Jonathan and Peter to a certain extent. So if you're small and fragile and it's been a tough time, COVID's made it really tough. What I do think in battery innovation is there's been a slight difference in that we know that right here, right now, COVID's made long supply chains look really untenable for moving forward. We also know, though, that actually the impact of COVID on things like the aerospace industry, which, you know, if you were going to invest and you're a VC and you're investing 2 years ago, you'd be thinking, well, you know, aerospace, it's a good, robust investment. It's going to be here for the long term. And actually, all of a sudden, the risk calculation has sort of turned on its head. So what we have seen is we've seen a continued, almost a really determined effort from startups and companies looking at this innovative sort of piece to keep going, right? So where we thought they'd be more fragile because of this depression almost and perhaps the other areas from COVID, there's been a real increase, and that's borne out because or that's happened because we've seen EV forecasts continue to grow. In fact, the growth of EVs in Europe and in the UK, Peter, I can't talk to the US or South Africa, but actually I suspect it's the same. Actually, it's increased. So what pre-COVID was like, oh, you know, when's that going to take up? When's the inflection point going to be? All of a sudden, people are going, oh, it's now. And so you're going to see some noise around that. You're going to see internal combustion engine cars, you know, bounce back and also get discounted over COVID over the next few months and perhaps a year. But I think the long-term transition is getting much more accepted, and therefore the investment into electric vehicle technology is starting to flow a bit more. And I'm hoping that then winds its way up the supply chain, Peter, back into mining at some point.
Yeah, and I suppose what the last 12 months has shown us, if anything, is that, you know, society, supply chains, everything can actually change really dramatically in a very short space of time.
It can. I mean, personally, you know, it was great to see things like people noticing air quality. I have an environmental regulatory background as well as steelworks background. But then actually, when you look at recession, I think China announced this week very much that they're going to exceed CO2 emissions, because coming out of recession, everybody is then trying to find their way back out to an economic stable sort of position. But actually, having said that, you know, how quickly certain industries are going to recover is still a question mark. You know, how quickly are we all going to start flying around the world again? It's still a question mark. So it comes back to that element of risk and how you assess it. And at the moment, EVs, you know, look to be that trend that's shoring up at the moment.
Yeah, absolutely. Matt, how about things from your perspective then?
So, I mean, I would flag two things really. The first is something that Jackie already mentioned, which is the emergence of Europe as a driver of EV sales. And what that's done is it's totally changed the balance of demand in the world. Prior to 2020, China was the major, if you'll excuse a horrific pun, engine of the EV space. But now with Europe pushing forward, it really stretches out supply lines, because while we do have a number of cell factories in Europe, we still have to import batteries, but we don't have anything really in the raw materials, intermediate material space. And that's really, really stretched out the supply chains, because even though, you know, we have some production in Europe, we're having to import the rest of that raw and processed material. So that's a real concern. The other issue that we see, or that we see from our point of view, is the availability of cheap capital in the mid and downstream of the electric vehicle industry. So in the EV and the battery development side, between the SPAC market in the US and the wider capital markets, we've seen up to 10 times the funding going into the downstream that we have into the upstream. And that's a real issue, because it takes between 2 and 5 times as long to build upstream capacity as it does to take downstream. So that's a real emerging problem in the market going forward.
Thanks, man. I suppose that kind of moves on, well, it kind of leads into my next question, which was going to be about how COVID has actually thrust these international supply chains into the spotlight. And very much as you've just touched on, in the UK and Europe, we're seeing this increased drive to establish domestic supplies of some of these critical raw materials, this upstream capability as well to match all of these mega factories that are being built. Has this had any effect on the jurisdictions or the companies that you or your clients are looking at, or through the battery materials review? What are your
I mean, to be fair, we were already looking at the European raw materials potential anyway before COVID, before all of this happened, and indeed North America as well, because it's been clear for some time that there was an emerging issue. If anything, COVID has sort of accelerated the decentralization and certainly the political will that's going into the decentralization of the supply chain. But the issue for us is, and I'm afraid it remains, the lack of centralized support for raw material development. So particularly within the planning process and the financing process. So perception, I think from a top-down perspective, is that mining is a bad industry. But as I said before, there will be no green revolution without mining. We need raw materials to power the green revolution, and we need to see a joined up approach all the way along the development pathway. And I think, you know, some people get it, a lot of people don't. And we need, you know, support all the way along the government level, and also national governments, but also regional governments, to get planning permissions through, you know, for a lot of these projects that need to happen if we're to take it forward.
Yeah, absolutely. Is there anywhere that you think is actually doing that well at the moment, that kind of joined up thinking from upstream all the way into?
I think a lot of governments are paying lip service to it, but we need governments to put their money where their mouth is and actually, you know, fast track some of these projects through the environmental process, put a lot of financial support. I know, for instance, the UK government has put a lot of financial support directly into companies. We've had some European governments talking about doing that, but at the moment, the bulk of the financial support is going into the midstream and the downstream and not really into the upstream. So we need focus on raw materials. Raw materials is not trendy. And I think the ESG focus of the last 5 to 10 years is not helping people get into investing in the raw material space.
Yeah, we almost need, there's such a big job to do in changing that narrative around the role that raw materials are going to play in this energy transition. And actually, before I come to Peter to ask about the situation in South Africa and how that might compare to the UK, I just want to come to Jackie, because I know that this is, you know, she's very involved in what roles can government play to try and facilitate this. You're on mute again, I'm afraid.
Sorry, I've got noise in the background, so I'm just trying to keep it out of people's ears. Yeah, so I guess when we look at what government can do, it gets really complex very fast. So if I look at Faraday, right, Faraday is a massive amount of money into innovation, but we are trying to work as a mission. So alongside us, we brought on and got on stream the Automotive Transformation Fund, which is up to £1 billion worth of supply chain funding. And that's not going to cheer up miners very much, because again, as Matt says, it's predominantly in that middle space to augment what we're doing in the sort of downstream. The question is, how do we get things moving? And this is the bit. So I've just come off, for example, a sustainable batteries cross-government group with organisations like the Environment Agency, Health and Safety Executive, DEFRA, BEIS, DFT, the Department of Transport. So we're looking to really not only fund it, but also bring it together, that everybody starts to really understand how to pull together to get things through faster. And I think that's the bit. So once we can actually really have confidence, we've got volume manufacturing, for example, in the UK, then you start to be able to put sort of scenarios together on what the future is going to look like. And then you get to the point where actually government can start to go, actually what we can do in the mining space, what really works for the Johnson Mathers of this world or the British Volts of this world and their supply chains. The problem, I guess, with being so far upstream is it's very hard for governments to go, well, if I put a fiver here, I'm going to get a tenner back in 5 years' time, and it's hard to see that far up the supply chain But it's not a case of a lack of apathy anymore, or leaving it to the supply chains to sort it out, to market demands to sort it out. We are really thinking very hard about it. And as you can see from a title of a Sustainable Batteries Cross-Government Group, actually what is also really important in all of that is doing the right thing. I kind of quite often when people talk about civil servants, I think it's a very easy job to describe, because your job is to get the right things to happen for the UK, right? So we have to make sure that whatever does come forward is also, not slave mined, that actually the waste streams are being dealt with at the same time, that we're understanding all of that. And actually there's a joined up think around actually the full impact of what we're doing. So it's great when I listen to companies making moves into recycling and potentially producing recyclate of the future, but also when I talk to companies that are looking at how they can employ blockchain, or they can really get the data to flow the right way to give the governance to the life cycle as well. So there's some really interesting challenges out there.
Yeah, and absolutely. And it's great to see that it's thinking about the whole circular economy around this battery ecosystem. So that's a very kind of UK, European centric view. Peter, have you got any thoughts on this from your perspective?
Okay, just remind me of the question, Lucy. How can government facilitate and help the supply chain?
Absolutely.
Look, it should be easy for our government to help, because they're the ones that put in most impediments. But unfortunately, most of their policy and regulation stems from their indoctrination of the Soviet Union days back in the 60s, 70s, 80s. So most of our policies were written in those times, and the government we have now, the ANC, it took over in '94, and it was pretty cool at introducing these new policies, these new regulations. They needed to fit into government, see how it worked. It was a very new experience for all of them. But by 2000, they realized, hey, we're now in control enough. We got the masses behind us. We're now going to start implementing these policies we've been working on, these centrist, statist, central control policies. And so they did that with the 2004 Minerals Act. They nationalized all our mineral properties. And they had taken control of the commanding heights of the 83 parastatals and what do we call it, state-owned enterprises, like the airports company, Transnet, SABC Broadcasting, Eskom Power. So unfortunately, they kind of did what the Soviet Union ended up crumbling from doing. They took over all these segments of the supply chain, and they made it very difficult for companies to go outside that supply chain. It was literally illegal to generate your own electricity. It was illegal for you to build and operate a railroad. So that's really worked against all the companies that need to have a more effective, efficient supply chain. Now I'm fast forwarding, it's 2020, and the government realizes it can't do a good job of running all these organizations. It can't do a good job of running the pipelines, the electricity generation, the railroads, the harbors. And so it's having to loosen the reins and let mining companies start building their own railroads. Let them start building their own power plants, and maybe open up Eskom so they can use the transmission capability of Eskom to move the power that the mining companies are generating. But unfortunately, they've been an impediment, and they can't back up fast enough. So like I said earlier, the established mining companies can handle it. They've got pretty strong balance sheets. They're used to doing most of these, the full spectrum of accessing minerals, processing them, selling them. But they could do so much better if first of all, if all of our SOEs operated correctly, and if not that, at least if the government would undo the shackles. So it is in the process of doing that, but boy, it can't come fast enough to help.
Well, I suppose that is a positive then, that there has been this recognition that maybe how it is currently isn't working for everybody. So
yeah, definitely. Just when you're an ideologue and you are so welded to your ideology, you're right. Just the last year, literally since the virus hit, all of a sudden ideology has taken a real far back seat. It's coming up so much less in the press and in the day-to-day interactions. So that has been a big plus of the virus hitting here, is it's getting rid of an ideology that's brought this country to its knees.
That's really interesting. So I suppose we'll see what happens over the next year or two then in that case. Be good if it does continue. Jonathan, I'm going to come to you next, if that's okay. So Eurasian aren't actually just miners, but you've got integrated operations that span the whole value chain through from mineral extraction to processing, logistics, and marketing. So do you think that this means that you've been impacted differently to your typical mining minerals extraction company?
Probably. I mean, Peter touched upon it a bit. I believe there's three ingredients for success in mining. On the one hand, you need to have a great resource, otherwise everything doesn't matter. You need to have a great team that can execute, and then you need operational excellence. And a large piece of that is managing your logistics properly, and that's probably 1/3 of doing the business. We learned this very early on already. So we operate one of the largest truck-trailer combination fleets in the sub-Saharan sector with over 600 truck-trailer combinations. We own a large train business operating in Kazakhstan into Russia with several thousand locos and trailers. We own our own power operations, and we constantly keep that on the strategic agenda to see where should we insource, where is making better than buying, both on the critical suppliers, being it sulfuric acid, for instance, on our cobalt operations in Africa. So yes, and that's on the one hand is really controlling that piece of the supply chain, but at the same time, the important thing that comes with it is creating momentum. You have the people, you have the capabilities, you have the network, you know who to talk to, you know for alternatives. You're able to operate more flexible and more agile in a changing environment, and that's what I believe is the key to success. And I totally agree with Peter of saying that a large company can potentially do this better than a small company, but you need to prepare for it as well. So it doesn't come naturally, right? Other large companies that tend to be a big tanker and quite the opposite of agile. So you need to work hard on it and enable it. Yeah, but yes, I agree. Large companies certainly have the better foundation on achieving that.
Yeah, well, thank you. And, it's fantastic that you have managed to have that, keep that agility within the last 12 months as well. So next, I'm going to come to Matt and then to Jackie. And returning a bit closer to home, how are Brexit and the rules of origin impacting the establishment of the battery ecosystem in the UK and Europe? And particularly with the short lead times, so it means that they're going to have a fairly big impact fairly soon.
I mean, I'll speak to Europe. Jackie's the expert on the UK, so even though I'm British, I'm not that close to what's going on in the UK specifically. But in Europe as a whole, including the UK, I think it's going to be really difficult to establish enough raw material production to meet the timelines that have been established. And that's not just in terms of the primary raw material production, it's also in terms of the recycling requirements that the EU's put in place. Because of course, the big issue that we have with recycling is that until there's enough primary material, there's nothing to recycle. And electric vehicle batteries have got now probably a 10 to 12 year lifetime. They potentially could have a 15 to 16 year lifetime when you add in second life applications. So there might not actually be a material amount of supply for recycling until the mid parts of the 2030s. And I think that the potentially the politicians have to be realistic about how much material is going to be available from recycling and how much has to be available from primary supply. But going back to the primary supply, which was where your question was, I think it's going to be very difficult to establish enough supply in time to hit the timelines that have been put in place, unless something shifts very materially in the next year. I mean, you know, once a feasibility study is in place, it can take 3, 4, 5 years to build a mining project. You know, before a feasibility study, you're probably talking up to 10 years. So I think even though Europe and the UK has a pretty reasonable resource inventory when it comes to electric vehicle materials, we need to see an acceleration of investment very, very rapidly if we're going to be in a position to supply our own. I'll hand over to Jackie to talk about the UK.
Yeah, it's a question of two parts, right? So it's a huge challenge. I'm going to echo what Matt said, you know, the onshoring of a huge supply chain, especially when you put that in light of, you know, that there's a huge anticipated global demand for these materials. And so it's a massive challenge, right? Okay, so we know that the time scales are really short. What I would say that we tend to forget that the UK actually has been doing this, right? Not all of it, but actually, you know, we made 175,000 Nissan Leaf in the UK since 2013. So, and all the battery packs going into them was made in the UK. So we have some knowledge of this, and we have a very strong automotive sector, really motivated to get this sorted. And the thing with the rules of origin, you know, this really is around avoiding those tariffs, and that, you know, you can stipulate, you know, that it can be in the UK or EU. And that's, you know, so we do want to continue to export into Europe. It's where the UK is really done really well over the last 10, 15 years, actually. We've sort of got more than our fair share of manufacturing, particularly internal combustion engines. We make almost 2.5 million of them in the UK and export 80% of them out and 60% roughly to EU. So we have a real sort of driver for doing this. One of the things that has happened with the rules of origin and the Trading Cooperation Agreement coming into place is investor confidence. So you've seen some really significant, this is sort of the second part, announcements from Jaguar Land Rover, Ford, and also Nissan around following that. You see Nissan sort of announce that it's going to stay in Sunderland and it's going to really commit to electric vehicles in the UK. So there's lots of reasons for optimism because the vast size of the EU-UK electric vehicle sort of demand is there. Are we going to do it? I think it's going to be a challenge, but onshoring a lot of that to Europe and UK, I think it's doable. And I think actually COVID's almost given us a head start. You know, we've had lots of supply chain interruptions that people have been really thinking about the system as a whole.
That's
well, if
brilliant.
I may add
Thank
to
you.
this, right?
Yes, please do, Jonathan.
All of these players need to commit to the full supply chain. You can't cherry pick. Yeah. We earlier said we want the EV revolution. We want our cities to be clear. We want to achieve our CO2 emission goals. But that means that we need to upgrade our infrastructure. And that means more copper, that means more cobalt, and so on. And it needs to come from somewhere. And we all agree that we don't want child labor in our iPhones. Yeah. But that's not only on the responsibility of the mining companies. So we need to have a global commitment to the standards, and we need to demand from the legislative and the national authorities to enforce that we all play by the same rules. And as long as this is not enforced, it will be very difficult to do that. And it's not right to have one part of the supply chain having all the responsibility and some of them not. And what you have in the beginning, the rules of the games, they are very clear. And what the end customer demands is also very clear. But now you need to fill the gaps in between. Mm-hmm. And I think on that, we have started the Global Battery Alliance with the World Economic Forum, and we encourage everyone to join that in that mission to actually achieve that. And it needs to be in a collaborative approach. It can't be isolated. Yeah?
And I think that's a really important point, that, you know, in this industry, as opposed to many other mining industries, sustainability is absolutely vital, and that comes down very, very clearly from the clients, which are at the end of the day the auto OEMs, that they want sustainability, and it's actually changed the way that the industry operates now. You know, mining companies have to go through very stringent qualification periods to get projects into production. They have to supply a lot more material for chemical testing than they would have had to do in the past. So it's changing the way that the industry operates. But I echo.
But it's not about sending over a questionnaire. Huh? Fill it out, please, and confirm that you're compliant. That's what I mean. It's not sufficient.
Yeah, no, I echo what Jonathan says, because I think it's really important that we have a clear sustainability requirements for companies, because there's a lot of processes that are coming up now which are clearly not environmentally sustainable, and it's very important that we clarify what is acceptable and what is not.
Yeah, and you know, especially because the demand for these raw materials is going to be so vast that actually, how on earth do we ensure that these materials are being produced as responsibly as possible?
And that's interlaced with the fact that you know, we talk about massive increases in EVs, right? So in the UK, we've had over 50% increase year to date in the sale of EVs. That's still in the thousands, right? That's nowhere near the market, right? So it's still early stages. So when you then put in the fact that consumers are expecting an environmentally friendly product at the end of it, that's why, you know, your Tesla driving chief exec doesn't want to hear that actually he's made a mistake and he shouldn't have bought that vehicle. So there's a lot of focus on sustainability. It's a lot of collaboration going on. And Jonathan, I agree with you about the Global Battery Alliance and the battery passport, and supporting those sorts of rules, and also the innovation that needs to come forward for the platforms to get those to happen has to be very much at a systems level. We can't just sit back and go, no, it's okay. The recycling will take care of itself. And that's why actually in Faraday, well over 20 million of our research has been into recycling and second life.
Yeah, and you know, that's where this kind of stewardship of that whole supply chain is so important, because actually, you know, the example that Peter's just given, governance can be a real hindrance to this, to establishing things like this. I'm very aware of time, so I'm going to ask you one last question each, because we're just a few minutes away from the end of this panel. So to sum up, where do you each think that the biggest opportunities lie over the next couple of years that have been created by this kind of changing global supply chains over the last 12 months? I'm going to ask Matt first.
Well, I mean, for me, I'm a geologist, so I'm a bit biased. But for me, it's in the raw material space, because there has been such a significant underinvestment in raw materials. I mean, for me, particularly two raw materials: high purity manganese and lithium. High purity manganese, there just hasn't been enough investment globally, and it's a huge growth area. And then in lithium, whatever technology you look at, whether it's NCM or whether it's LFP or whether it's solid state, you're going to need lithium for those batteries. So, you know, those are the areas where I see the biggest sort of supply demand gap going forward and the biggest opportunity.
Yeah, thank you. Jackie, how about you?
So I think it's actually, I'm going to annoy everybody on the call now. I think it's that downstream volume manufacturing. I think it's almost like when you have that, you have more knowledge, and then the collaboration starts to really form. So the problem we have at the moment is there's only a couple really of gigafactories in Europe. Once you secure those, actually what you secure is a keystone for the entire supply chain that starts to really drive through a lot of that. So if I have a gigafactory that's demanding sustainable product, then and they understand that where they're struggling to get materials from, then that changes the supply chain in the understanding of the products that are going to be going out of it, but also they bring back around the recycling and the whole sort of system. So for me, it still sits in that volume space, because it's very difficult to predict otherwise. You know, who knows what LFP is going to be doing over the next 5 years, right? But if you're in volume manufacturing, then you're the one signing the deals with car makers and vehicle manufacturers. So you're the ones that really know where that's going.
Yeah, I suppose we're biased coming from the upstream geology point of view. It's because it takes so long to bring projects on stream and actually producing stuff. We kind of feel like it needs to be now. But
and that's kind of why the volume, right? Because they're your customers. They're the ones that actually are gonna get those contracts at those massive syndicated kind of loans,
chicken and egg situation.
Finance in place. Yeah, there's this chicken and egg.
Yeah.
And understanding where that's going to be, that can only really come through that.
Yeah. Thank you. Jonathan, what about in your perspective? Where do you think the biggest opportunities are over the next year or two?
I personally would hope that the COVID pandemic is helping our, let's say, a bit conservative industry to be more brave in the adoption of new technologies across value chains, and the emergence of new digital business models in that space.
Yeah, and hopefully I think we have really seen a bit of a step change in that over the last 12 months. So long may it continue. And then Peter, again, last but certainly not least.
Boy, Lucy, I see 3 areas. Now, if I wasn't a mining engineer, if I was just any kind of engineer and a concerned citizen, I'm looking at where's all these batteries, these solar panels, these windmills, where are they going to be in 20 years? Because I think that's the life most of them are talking about. And so what's going to happen with all this equipment, with all this material, recycling that? Boy, it's not like melting down steel. It's not like recrushing concrete and making another road or another building out of it. So I don't think that's the miner's problem. I think that's the world's problem. What are they going to do with all these finished products, the lithium batteries, the solar panels, and the windmills? If I look at the miners' side, for the small miners, they can't cope with the ESG demands made by government and investors and communities. And I was at a small conference here last week, and the last person I met before I left, 3 of my associates grabbed me and said, "You got to talk to this guy." And it's a company, a mid-sized company that is now supplying all these ESG, this social, labor, environmental. They're doing all that work so that the small startup can do what it does best. It can find, it can explore, it can develop the mineral, maybe spend a little bit of time raising money, but all these other social, labor, ESG issues, they can now contract them, kind of one-stop shopping. And they can use this as a cookie cutter, because there are 1,000 small mining companies here. There's only 20 large ones and maybe another 10 medium ones. But that's the opportunity to go forward, because I don't see less regulation in any country. And because it's now part of the investor's plate, they're demanding it, banks are demanding it, private equity, pension funds. So if we want to see mining grow and not just be dependent on these big companies, it's how are they going to handle all these little issues? So I think there's lots of opportunity for people that are good at juggling that, handling the admin, the regulation, ticking the boxes.
Yeah, absolutely. And, thank you very much. So to summarize then, this has been a fantastic chat. Thank you. I can't believe it's been 40 minutes already. I think we've touched on so many different subjects about how, yes, there's the UK and the European battery space, and there's a huge amount of work that needs to be done quickly to find the raw materials for that and actually build that downstream volume capability. But actually, kind of globally, ESG is so important. We need responsible stewardship of all of these natural resources, but not just producing the natural resources, it's that whole life cycle. We also need to be thinking about the rest of the supply chain and how will we recycle things in the future. So I think that's been a really interesting discussion. Thank you all very much.
Thank you, Lucy.